Good day, champs. This is your guardian, Anthony Phillips Njoku, the founder of 10x Digital Inc. And today we'll be talking about the fundamental news events for the time period of April 15th to April 18th that is going to impact the Forex markets. Okay, unlike before, we always handle the technical and the fundamental together. But today I wanted to dive deeper. I wanted to discuss in depth because last week I saw a lot of my VIP students reach out to me and they were like, boss, can you please explain properly how these fundamentals will make me make a decision or push me to make a decision to buy or sell? Okay, so today I want to take out that time and not just discuss about this time period of 15th to 18th, but as well show you an illustration, one or two illustrations of how this played out last week so that you can as well have a brief of idea of how this works because I always want to give my VIP students the best value possible. So if this is your first time, this is a free content literally. If this is your first time to come across my content, smash the like button, subscribe, and share this content with your friends and family. And if this is not your first time, thanks so much. And I hope you will come back to watch this content and as well follow the channel. Meanwhile, on my screen right now, you can see the the news event. This is Tuesday, April 15th, 2025. No high impact new events today for Monday, April 14th. That's why I said this fundamental is for April 15th to April 18th. So with that in mind, early Asia session, we have GBP, okay, BRC retail sales monitor year over year. Okay, so if you really want to know what this means, most times you can click on it, just a button, just click once. So once you click on it, if you're on your Chrome browser, it should open up a new tab for you. If you're on your phone, you should dive into the content itself. Okay, so let me click. Since I clicked, let's load it. Okay, so this will now give you an opportunity to come over to the new tab that is created on Chrome and study more about this material. Okay, what exactly is retail sales monitor you over here? For me, retail has to do with a retail store owner. Okay, and this has to do with the sales of this retail store owner. Okay, and this sales has been monitored last year to this year. That's what year over year means. And the month is March. That's what it means. So this BRC is the organization that is now monitoring these retail sales, and this is going to affect the Great Britain pound. Okay, it's going to affect the Great Britain pound. You can come over here and still read the full details once this is loaded. So with that in mind, the previous figure, which is last year, okay, March, they said that it was 0.9%. And then this year, they're anticipating it to be 0.5. This is an anticipation. Consensus is an anticipation. It's not actual data. So consensus is 0.5, okay? So this is bad. It's bad news. Let's say you were selling products last year March, or your total sales last year March was around $1 million, and then this year they're telling you that you're losing about 0.4% of those sales. That's literally you're able to sell those $600,000. That's bad, or pounds, because this has to do with Great Britain pounds. Okay, that's bad. Okay, so you need to be able to what, get a higher figure. So by this time, 12 a.m. West African time on 15th April. If you see a figure higher than 0.5%, it is good for the Great Britain pound. A lower figure than 0.5 is bad. Let's say the figure we see is now 0.7, which means, okay, actually what you got was 700,000 pound sales. But actually last year, the sales you made was around 900,000 pounds or 1 million pounds like I used before. Okay. So that's literally the difference. Last year's own is higher. This year's own might be lower, but it is higher than the figure that we got was higher than what analysts were expecting it to be. With that in place, it's going to make some reactions in the market. Okay. And investors will be interested to buy the paper because it was higher than what the analysts were saying. Because once the market is how the market is programmed psychologically is that the market is working with consensus. Every investor is working with consensus, what analysts are saying. Okay, so if you now want to like analyze GBP US, you can go to Goldman Sachs website, go to Barclays website. You understand? You see these banks, they have analyzed where they expect GBP USD to be before the next quarter. So investors are using what these analysts are saying because they believe that these analysts have more data, they have more experience, and they have control in this market. You understand? So we work with the consensus, but once the actual figure is now out, forget the consensus, what those people said. Investors start working with what is at hand. Do you understand? So with this consensus, literally, it's going to make Great Britain pound to be weak. But once the news comes out and it is higher than what the analysts are saying, it's going to make Great Britain pounds to be strong. But if it is lower than what the analysts are saying, it's going to make Great Britain pounds to be even weaker. You understand? So that's literally what this is. Then we have the Reserve Bank of Australia meeting minutes. Okay, they're having a discussion, Reserve Bank of Australia, and that's by 2:30 a.m. Then early in the morning, London session, we have the Great Britain pound employment change and unemployment rate. Like I told you earlier, if you click this retail sales and came over here to the new tab, you can be able to read it in details. They said here a higher than expected figure should be seen as positive for Great Britain pound. So the expected figure is this. So if you see a figure higher than 0.5, if you see 0.6, 0.65, 0.7, 0.8, 0.9, that's higher figure. It should make Great Britain pound to what? To be bullish buys. But if you see a lower than expected figure should be seen as bearish. So you see 0.4, 0.3, 0.2, 0.1, minus 0.1, minus 0.2, 0.0 should make Great Britain pound to be weak. That's exactly what I explained. So with that in mind now, we have the unemployment rates. Unemployment, what does it mean? People are not employed. And if they're not employed, they're not getting paid salary. And they're not getting paid salary, they cannot handle their bills. And it's bad for an economy. It can lead to corruption and the evil practices by those individuals. So literally, they're saying here that unemployment is 4.4%. And analysts are saying that it might stay at 4.4%. So with that in mind, we don't have any actual figure yet. Well, by 7 a.m. tomorrow morning, we see a figure higher than 4.4%. It's going to make Great Britain pound to be weak. If we see a figure lower than 4.4%, which means that lesser people are unemployed, it's going to make Great Britain pound to be strong. Investors will buy. Okay. So with that in mind, then by 10 a.m., we have the Economic Sentiment Index. ZEW, the company that's handling this Economic Sentiment Index. What is sentiment? Sentiment has to do with how you feel about the economy. Okay. If you bring up any Nigerian now, tell Nigerian, hey, what's your sentiment about Nigeria? They will tell you this, the prices of food, the prices of rent, and this and that, price of electricity is going up and so on. So that's sentiment, literally. And they'll ask you, okay, what do you think will happen in the future? That's why analysts come. That's why companies come to gather this information. You understand? Then see what do you think will happen in the future? What do you think should be done in the future to make these things better? They will say what they have in mind. The sentiment. Okay. So in Germany, to be precise, this company is handling the sentiment in Germany, okay, for April. And then the previous figure is 51.6. The analysts are saying that it is go to 5. With this in mind, it is a pessimistic sentiment. They have two types of sentiment: optimistic sentiment, which means that it's positivity. Okay. Then if you say pessimistic, it is negative sentiment. Okay. So literally, when you say that a sentiment is pessimistic, it is bullish. So it's bearish. It's bearish. It's bearish. But when a sentiment is optimistic, it is bullish. It's positive. It's bullish. So investors are interested in optimistic sentiment. Why they run away from pessimistic sentiments. Okay. So over here now, they're saying that it will be 5%. So if you see a figure higher than 5%, you should make euro to be strong. Okay. But if you see a figure lower than 5%, you should make euro to be weak. Then the CPI median year over year is for inflation in Canada by New York session 1:30 a.m. Okay, so last year match against this year match. Inflation, once inflation is increased in figures, okay, it makes what the currency to appreciate. Once inflation reduces in figures, it makes the currency to depreciate. So 2.9%, 2.9%. If you see a figure higher than 2.9%, you make Canada to be strong, Canadian dollar to be strong. If you see a figure lower than 2.9%, to make Canadian dollar to be weak. The same thing here, inflation rate over here. This is a derivative of this one. This is the main one. Also, this thing means a derivative of this inflation. So what every other news calendar app will be showing you this inflation rate year over year. This is a derivative. This is a derivative. Okay, but the major one is this one that has everything that this one does not have and this one does not have. So with this over here, that's analysts are saying that it is 2.8%, which is higher than the previous of what 2.6%. So in actual sense, this should make Canadian dollar to be strong, okay, by 1:30. But we see a figure that is lower than 2.8% by 1:30 a.m. Sorry, p.m. West African time tomorrow. Then boom, Canada should lose some strength. So over here we have the New York Empire State Manufacturing Index. Okay, this it has to do with the manufacturing uh uh price projections. Okay, so let's read a bit about it. Okay, so they say here now the US, United States, New York Empire State Manufacturing Index, and this is going to be the last one I'm going to do such for. Okay, based on data taken from a poll of 200 executives, company owners, okay, from companies in the manufacturing sector in the United States. It is data. They don't just come up and start giving this feedback. They actually do the research. The New York Empire State Manufacturing Index, which is this, is measured. Participants report on the change in 11 variables from the previous month, including the amount of overall company activities, new orders, shipments, stocks, personal count and delivery time, and capital expenditure, as well as the direction in which these indicators are likely to move in the next 6 months. A reading above zero implies that manufacturing activities is expanding, whereas a reading below zero implies that manufacturing activities is falling. A higher than expected figure should be seen as bullish for US dollar, while a lower than expected figure should be seen as bearish as year for the US dollar. That's literally what it is here. So actually, we can see that the manufacturing sector is on a negative projection. The previous month of March is minus 20. Analysts are saying that this month of April will increase to minus 14.8. It is an increase. Okay, but if there is minus 20, 21, it is a decrease. Minus 14 is higher than minus 20. Okay, so it's an improvement. So let's say by 1:30 tomorrow now, the figure comes out to be minus 13. That's going to be a massive result because banks are the ones that will actually generate this. It's banks that they get all these figures from. Banks, hedge funds, and so on and so forth. But it has to do with the manufacturing sector. So the manufacturing sector in the US is actually poor right now. They're not even in the positive territory. Okay. So now start saying, yeah, they're now building upon the positive territory. They are on the negative territory. So that's what I see right now for the US. And I've already explained this. If you see a figure higher than minus 14.8, it is good for dollar. Like minus 13, minus 12, even one. One would be a massive shock on the market and dollar could gain massively. Then if you see a figure lower like minus 15, minus 16, then it should be negative for dollar. Then Wednesday, we have inflation rates. I already explained it with the Canada own. Okay, if you have a figure higher than 2.7%, it should give Great Britain pound strength by 7 a.m. But a lower figure is bad. Then CPI as well for even is inflation. Okay, by 10 a.m. If you see a figure higher than 128.4, it should give even strength. A figure lower than 128.4 should give even weakness. Then retail sales, I already explained this. Retail sales month over month, year over year, and ex gas slash auto month over month. Okay, by 1:30 New York session. Okay, if you see a figure higher than 1.3%. This is a derivative. This is also important, but we will more focus on the month over month because this has way more impact. Okay, so over here now, retail sales in US, they're saying that the previous month is 0.2 for February because this is measuring for March. You can see it's a MAR. So for February is 0.2. Then for March, they're expecting to be higher, like 1.3. So if you see a figure higher than 1.3, it should be good for dollar. But a figure lower than 1.3, it should be bad for dollar by 1:30 p.m. tomorrow. Okay. Then this is a derivative. This is also a derivative. Okay. Then we have interest rates. Wow, decision for card and they are planning to keep it unchanged, okay, 2.75%, 2.7, because every bank has a target of 2%. So card is still above their bank's target. They still need to cut their interest rate by 75 basis points. 75 basis points. Mean of 75 basis points is after 0.75. Okay, so whenever you hear cut of 25 basis points or 50 basis points, it means 0.25 or 0.50. Okay, so that's how the language is. So after that, by that same 2:45 tomorrow, there's going to be a monetary policy report by the Fed, and then in the evening by 6:30, Fed chairman is also speaking to the US Wednesday by 6:30 about the US economy. Then on Thursday, we have the balance of trade early in the morning by 12:50 a.m. for Japan. Has to do with imports minus exports when you hear balance of trade. And this is very, very important news, okay? Japan is known as the center of trade in the whole world, okay? And they're currently on a trade surplus of about, I think, about $800 billion, okay? Trade surplus. Like the amount of money they receive on a yearly basis is 800 billion based on trade they do with every part of the world. Okay, so literally you can see over here that their previous is 584.5 billion yuan. And over here, this is a negative. I see a negative 100 billion yuan. Okay, so analysts are saying it's going to be negative, but we see a figure higher than this 100 billion yen, then we're going to see what Japanese yen will gain strength. I see this is the forex market. Anything is possible, but for me, this is linked to none. Like minus 100 billion yen negative as a deficit for Japan. Well, probably we can see a positive of we can see a positive of 100 billion yen, which should be lower than 584.5 billion yen, but it's not going to get to this negative of 100 billion yen. This analyst is probably just saying based on what the households feel, because the households in Japan, they're probably pessimistic about the future of Japan due to all these trade wars going on between China and US, okay? And it's affecting them. So that's why analysts are saying that this trade surplus, okay, the tariff now was making this trade surplus consensus to be minus 100 billion yen. Okay, so if that tariff war hold on for the next 90 days, like it's meant to be hold on because US has already imposed, I think, 126% tariffs on China. Okay, and if that's the case, yeah, this projection could be true. This projection, because it's banks in Japan that is actually giving these projections. And since every other part of the world is on 10% tariffs, except from China, these projections are actually possible. Then by 2:30 a.m., okay, we have the employment change, unemployment rate, deposit facility rates. Okay, this one is for Europe. Well, this is unemployment rate. So by 2:30 a.m., you see unemployment rate increase. Like any person rate to increase. If it increase, AUD should be weak Thursday. But we see if you go higher than 4 points, so if you see if you go lower than 4.2%, AUD should be strong. Okay. But we see if you go higher than 4.2, AUD should be weak. Okay. Then early in the morning, early New York session, we have the police facility rate, aka interest rate decision. Okay, for Euro. Okay, so over here now, Euro has a 2.65% rate. Okay, and then they're saying that they will reduce it to 2.4, which is cutting their interest rate by roughly 2.5. Yes, if you remove 2.5 from 2.65, you should give it 2.4. 25 basis points cut. If that happens, euro should lose strength. But before that, we will have to check. I'll show you guys how we can actually use this type of data to trade the market in the future. Okay, so watch the end because a lot of my VIP students has asked me, how can I use this information to trade the market? I'll show you that shortly. So I'll click on this information. Let it load. Then let's go back to the family data. Then over here is initial jobless claims, okay? Jobless claims 4-week average, continuous jobless claims, okay? This is a derivative. This is a derivative. Derivative means that it has a primary one. This is a secondary. So this is the primary one, initial jobless claims, okay, for April 12th, okay, till this week. So they are saying to the date of April 17th, they mark it week by week. So from April 12th to April 17th, they're giving the initial jobless claims. How many people in US are saying that, hey, I don't have jobs anymore. I don't have a job anymore. Please, I need jobless benefits. So over here, the week of last week was 223K. Over here now, they're saying that it might increase to 224K. If that happens, dollar should be weak. But we see something lower than 224K, dollar should be what? Strong. The same thing for these jobless claims 4-week average and continuous jobless claims. If you see a figure lower than 227K, dollar should be strong. A figure lower than 1,890K, dollar should be strong. A higher figure should make dollar week. Then over here now, the housing starts. This has to do with those housing appointment that has been approved by the government. Before you start building, developing your house, developing your land, okay, you need to apply to your state government, okay, and they give you approval to start building, to commence building, okay. And once there is any agency that comes, you can show them the approval letter, and then they will let you be, okay. Over here now, they're saying that this approval for the month of February was 1.501 million. And then for March, they're saying that it is 1.41 million, so which is a drop. If you see a figure higher than 1.41 million, it is an increase. Okay, so it's going to be what? Strength for dollar. Then building permits. Building permits is different. Housing starts is that they have not started building the house. Building permits is that they have what? Started building the house. Okay. This one is they have not even started laying foundation, clearing the land. This one they have already started. It's just the permission to continue and also to rent it out. It's two things involved. So you have to ask for approval to develop. Once you're done developing, you have to ask for permission to rent. You understand? So this is the permits now to rent it out. Okay, so over here now is 1.459 million because there's going to be some verifications on the building you completed so that you don't just build anything crappy and then sell it, put it in the market. Okay, so for February they had 1.459 million, and then for March they're saying that it might increase to 1.46 million. So after the houses that apply for permits to be rented for accommodation, for office building, for literally industrial production and so on and so forth, it's increased in February. So if you see a figure higher than 1.46 million, it is good for dollar. But if you see a figure lower than 1.46 million, it is bad. Then by 1:45 p.m., the Euro Central Bank will be talking because of this interest rate decision that was announced by 1:15. Okay, so we'll still discuss this. Then on Friday, to wrap up, we have by 12:30 a.m. inflation rate over here for Japan. Over here, they're saying that it's 3.7% against 3.7%. Every bank has inflation rate target of 2%. But if you can see, there was a time Japan had a negative interest rate, but now they have entered a positive interest rate, and that has actually affected their inflation rate. And in that case, there's what a likelihood of what an increase of this from 3.7% even by 3.8 or 3.9 due to the tariffs currently being placed on Japan. So with that in mind now, I told you guys I'm going to give you a sample on how you can actually use this data to trade. So you come over here to this Euro central bank interest rate decision that was announced, that is going to be announced this week on Thursday. You come over here inside the MyFX book. You see here, you have chart, you have history. Go to the history section. On the history section, it's going to show you the past data that has been announced. Over here on March 6, 2024, okay, there was interest rate of 2.9%, but it was reduced to what? 2.65%. How many basis points cut? Do the calculation now. 2.9 minus 2.65. Let me do the calculation on my phone so I give you guys an accurate result. Okay, that was a 25 basis point cut. So now I will know that there was a 25 basis point cut on March 6th, 2025, okay, by 2:15 p.m. West African time. Let us see how the market reacted. Did Euro buy or did Euro sell? Let's go to the charts. Let's search for Euro USD. Now you need to do this on TradingView. What I'm about to do now, going back in time, is only done on TradingView on the laptop. You can't do it on TradingView on your phone, okay? So don't come to me and say, boss, that thing you showed us, so I cannot do it on my phone. So what we're going to do now, we're going to this day, March 6, 2025, by 2:15 p.m. Let's see how the market reacted for Euro USD. TradingView should load up now. Let me refresh. And you can see also here on January 30th, there was a basis points cut from 3.15 to 2.9. And this looks like a 25 basis points cut as well. Okay, so there is possibility to also check on January 30th, 2025 by 2:15. How did the market react to that cut? Also over here, you see here that it was 3.4. December 12, 2024, it was 3.4. They will cut it to 3.15. It's a 25 basis point cut. Also, over here, you can see there's also another cut. Okay. So starting from June 6th, there has been 25 basis points cut. Only on July 18th, they never cut on July 18th. Then they cut on September 12th. They cut on October 25 basis points. They cut on December. And all these things, there is a way the market should react to them all. Okay, so I'm trying to go to trading view. It's not loading up. Let me pick the tab. Let's clone you. Okay. I just need to show you guys this one sample. It's just one sample. I want to show you guys. Let me see if there's any other one I can use as an example here. Aside from interest rates, which other one has an impact? Unemployment rate, CPI too has. CPI too has. Let me see for something for tomorrow. Unemployment rates do have as well. Unemployment, CPI, unemployment rate jobs, job data. Which one they have retail sales, CPI as well. So let's do that. So now on our Euro USD, we need to go to this session. There is something that is here. See this icon here that has like a calendar that has an arrow pointing forward. That's where you go to. You click on it and you select the date. The date we're going down to is we want to check this one, March 6th, 2025 by 2:15. So you come over here, you select March, February, March, what again, 16th or 6th, 660. This is it. Then by what time? 2:15. Select 2:15. Oh, God of mercy. So trading view ads. So you select it here, March 6th. Right. Then go to the time 2:15. Is it? Then go, click on go. So you see over here, you cannot really see what happened. So let's go to the 1 hour time frame. Read the 1 hour time frame now to do that, and then click on go. Okay, so on the 1 hour time frame, what can you see? The markets bought on that day due to the rate was cut. On that day, the market bought. Can even go lower to like 15 minutes time frame, which means that it's telling us that if the market should cut again by that time, let's go again. 15 minutes time frame. Let's see what the 15 minutes time frame is telling us. It's loading. So on 15 minutes time frame, what can you see? There was a spike up on that day by that time. So should have just this that giving us a future projection that if interest rates on Thursday should be cut by 25 basis points again. On Thursday should cut by 25 basis points by 1:15, we should at least buy Euro USD. So this is just a sample, and it's one sample amongst many. You can do this with CPI, you can do this with unemployment rates, you can do this with retail sales. Okay, just go to the past data, see how the market reacted to the past data. Okay, when the result came out higher or lower, and then you can be able to now know how the market will react to the future data. So thank you so much for watching to this point. I appreciate it. Don't forget to smash the like button, share this content, and comment below if there's any confusion, or even reach out to me. The link is going to be in the description. Have a profitable trading career. Peace.